Welcome to our 86th edition of the Trading Opportunities webinar. This is Nirav, and let me check the settings, microphone, etc. at my end before we proceed. Doesn't look like YouTube is picking up the mic. Oh, there it is. Yes, so it looks like. Yep, it is working. So yes, guys, welcome to this webinar. And before we proceed, let me just get done with the legalities here. So here on screen, you can see the disclaimer. Basically, all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing, then you yourselves will be liable for your profit, loss, or loss of profit. Right. Rest of it you can just read by pausing the video. So with that out of the way, let's now proceed with the actual webinar content. By the way, those of you who are currently live, if they can also confirm about the audio and video, that will be even better. Well, nevertheless, I'll just check once at my end again before actually proceeding. All right, so in that case, let's now head over to the about us part. A little bit about me, guys. My name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis YouTube channel and 50eyes.com website. A little about these webinars. We conduct once every Friday at 2 p.m. GMT. We go live at this time. So if you want to join in, you can join in next time, Friday, 2 p.m. GMT. Right. So far in these previous 85 webinars, we have captured 149 trades. All of these trades were obviously discussed live in front of you guys, my YouTube audience, as well as it's also broadcasted on LinkedIn. So the LinkedIn audience. Right. And apart from these webinars, I'm also the author of the book, Think with the Markets. If you are interested in learning more of my work, I also have a video course. You can all check all that stuff by visiting my website, 50eyes.com. And yes, the charts we discuss and the trade setups, they keep updating. New information keeps coming in. And for that, I keep updating them in my private Slack group. If you are interested in becoming a member, you can just head over to 50eyes.com/contact us and select requesting details for Slack private group from the subject matter. And more details if you want to provide them in the messages and submit. These are all request only. So you will have to send the request. Right. And lastly, this is the forecast accuracy of all the past videos, webinars, which we have published since 2016. You can see it has been 83.34, followed by 87.5, 84.61. And as we go on, 88, 84.88. You can just scroll down, check the date, check the instrument name, the analysis. The video link is here and what happened. Right. This way, these accuracy reports are concluded, and for 6 consecutive years, the result has been 80% plus, ranging as high as 90. And from 2022, we started doing weekly webinars. So they are done every week. So I simply just don't compile them like this. We just discuss what happened in the last webinar and just talk in the current webinar about it. So yes, as I said, this is all above industry standard, and I've been doing this since a very, very long time. Coming on to the actual final part, we will start with Euro, followed by crude, followed by gold, Nifty, and then in the end we'll discuss BTC. So that was about that for the about us part. Now let's head over to the actual content here. Good morning, Philippe. And to other people who are watching, good morning, good afternoon, and good evening, depending on the respective time zones you are in. Yes, so now let's begin with our content. First of all, from the last webinar, 4 setups played out precisely. Like 4 of the setups we discussed in the last webinar played out as we discussed them, right? So we'll check that as we go from one chart to the another. For now, let's now focus all our attention on Euro USD and see what it's doing. So Euro USD, I have made some minor changes here. First of all, I am now considering this as our point of reference, which is basically the starting point of the analysis. Well, it's not well, it's working. Yeah, so this is the starting point of our analysis on Euro USD chart, which is at the price level of 1.04477. And from here on, what I am thinking is happening is that this market is heading up as a possible A, B, and possible C. That's one way of looking at it. There is one other possibility which I'll just discuss right away. So first, let's discuss this possibility. Let's call this the hypo 2. So in this case, what we are assuming is that this is your wave A or 1. Let's just call this an A. And this is a flat a 335 progression B. And then, of course, after that, it should go up for the C. So what I have really drawn over here on the screen is a simple structure, a zigzag structure, basically. So a zigzag structure, roughly speaking, will look something like this. That's your A up, a B down, and the C up. So if we compare it with the actual chart, the A up is very clear. It's a diagonal of the leading diagonal, basically. The B is a flat structure. This one over here is a flat structure. And once this is complete, we are seeing the last leg up, which is expected to be a wave C. Now, do keep in mind, I have not entered any longs. As a matter of fact, I was holding some shorts, which did not work out right before this webinar, because we were assuming that this was a possible diagonal structure. It made sense, a lot of sense when I was looking at it, but it didn't work out, so I had to close it. So now what is it really doing? If it's really going like an A up, B down, and C up, then we will get plenty of opportunities to go long. Specifically, I am looking for this market to be somewhere around this level, which is around 1.06224. Around this level, I'll be interested in considering long trades here. And the reason for waiting that long, I'll just go with the alternate view. So the alternate view here is, let's call that H1. So the alternate view here basically is suggesting that this is the AF, which is complete. This is the B down, which is again complete. And this is, one second, the B down can also be taken as here. And we are assuming that this is the C already complete. So long story short, what this analysis suggests is that this structure A up, B down, and C up is already done. A up, B down, C up. If it's already done, then all this leg up or all this movement in the upside direction is just a corrective structure, and as soon as it's complete, it will just fall back, right? So what I'm seeing here is that we don't have exact knowledge of which count is playing out, but from what it looks like, the short side setup is going to be more profitable, because if we break this market to the downside at this level of 1.05250, then we will have a stop loss. Let's say if the market reverses from here, then we will have stop loss of this many points, while the target will be, even the minimum target will be 1:1, a little bit more than 1:1, I believe, right? But on the opposite side, that if the market goes up, even if we take an entry here, there is no confirmation, it can just reverse basis of this first hypothesis or H1, right? So as I said, profitability is more on the downside. but we do not have a confirmation yet, so I'm not gonna just blindly take an entry right now here. Wait and watch here. One thing we can check here very quickly is the possible resistance levels for this market. And yes, it is coming right where I drew the alert level, 61.8. So that's about it for our discussion on Euro USD. I am considering waiting and more biased towards, not really biased, but more profitable setup will be if the shorts play out, and longs I will have to keep the position small, and there is a chance that it might fail and give us a loss, higher chance. That's about that for our discussion on euro, guys. Let's now head over to our next chart, CL. And for those of you who are currently live in this audience, they can put up their questions or comments if they have any. Otherwise, we'll just move on. The CL, it looks like it is working nicely. Let me just give you a quick rundown of what we were discussing on this chart last time when we did this webinar, or the 85th Trading Opportunities webinar. So last time our discussion was on 20th October. And on 20th October, the market was trading somewhere here, right? I had very clearly, I recall exceptionally clearly, I had discussed this count of this market having a expanding diagonal. I'll just remove this line. Yes, so it becomes clear. And the idea was clear that if this is a up, B down, and this is the expanding diagonal complete, then this market is just going to go lower, which seems to be what really is happening right now. And if I might take a moment here and just check very quickly on the 85th webinar, I'll just try to see if I can go there and show this on the video itself. So as you can see, this is the analysis from the last webinar, and I have drawn the diagonals and the discussion, etc., etc. It was discussed around 1450 something. So you can just go to the last 85th webinar and check it for yourselves. So point being, if you are attending these webinars regularly, there is value provided for free here as well. Right. So with that being said, now let's head over back to our analysis. This makes +1 to the number of trades which worked out, or setups which worked out from last discussion. Now, yeah, as I said, the market did go down as per our discussion. Right. I was able to capture some moves here, and I got caught up in this spike after the inventory because I was short somewhere here, but this spike was a bit fast and I couldn't exit. Right, but it does look like we may get another opportunity. Let's see how. 1 second. So instead of discussing the whole thing, what my current idea here is that from this point of reference, there is an existing possibility of a triangle in play. Now, this has not yet been what do you call, confirmed. So we will wait for the confirmation of this possibility. The confirmation will be that once we see a break below 83.85, we can say that this structure is most likely going to break. But also we have to keep in mind that we have to see the progression as well. It should have the wave E as well. That is, once the market goes up a little and then falls below 83.85, I'll be looking for selling this counter or taking short trades on this counter. Right now, if it goes straight down, then that can mean different things. But this is the main idea which I'm looking at. So this is how I will look for right now. What if it does not happen? What if it does not break 83.85, or if it breaks straight away? If it breaks straight away, then I'll still look for shorts. But if it does not break at all, then I'll have to consider other possibilities. So possibly one of them being that this correction is taking a little bit more sideways time, and in which case it can just continue progressing in this box range, which is currently between 83.227 to 87. So yes, that will become a sort of what you call a swing kind of analysis. So what I'm going to discuss here is that from short-term perspective, this is what I'm looking at. If it has to work out, I'm looking for the structure to proceed something like this. If it proceeds like this, then I'll consider shorts below 3.85. That's all I can see right now. Other than getting into complex analysis, of course. Right. And yeah, as I said, currently we are just looking for the shorting possibility on this counter from short-term perspective. I guess there is nothing much to add here on CL. With that, let's now head over to our next chart of gold. Gold has been moving nicely as expected by or suggested by the analysis which we did. Let me just remove this clutter from the screen and let me just show you what we discussed in the last webinar, which was conducted on 28th. The price was, where is this? So the price on 28th was somewhere here, right? And the idea which we discussed was that this market is just about to complete the impulse. As a matter of fact, I had longs, which I exited right in the live webinar when we were discussing this chart of gold last time. So what I'm going to do is just show that in the recording as well, because we already have one opened up. So this is the recording from the 85th webinar. Let's just head over to the gold part. And as you can see, I was calculating the upside movement and we were already assuming that it was at a long-term resistance of 1990. I recall that very clearly. And then the idea was that once this upside leg is complete, we expect the market to go and give a correction. We had already discussed these levels, 1950 something and then 1920, right? So this is the analysis from the last webinar. You can just go and check that by heading to 50 IS Market Analysis YouTube channel, live section, and then 85. Now, let's look at what happened really. The market did go to 1952. So it did achieve our first target, right? And it actually reversed right after that webinar actually. So again, this is another plus one from our public analysis. Do keep in mind, I go a lot more detailed and cover every move day in, day out and take my own trades. Everything isn't covered in Slack. In case you want to become a member, you can always get the details by requesting them from our website 50is.com/contact us. Now, getting back to our current chart, what is really happening is this has become a little bit of a complex structure. So what I'm going to do is try and simplify things. From this point of reference, what we have is a sideways correction going on within this box range, right? That much is always very clearly visible. So what is the structure really? It looks like it's gone down for an A and it has gone up afterwards for a W followed by an X and a Y. Now smaller W, smaller X, smaller Y, which then will complete the wave B. That's my assumption. Of course, it could also be that the whole structure is a complex W, complex X, and followed by a complex Y. So we do not have the proper confirmation for that yet, but the idea remains the same. If I remove everything here, then from a short-term perspective, the idea is simply that from this point, we are expecting an up leg, right? So if we are expecting an up leg from here, then how are we going to trade it? Well, the primary idea is that once I see a move somewhere above 1987, I will look to consider some longs on this counter, not full sized. I will have to check how much I can put in based on the price action at that time or point in time. Reason being, this is a complex structure. While I can very easily count it as a WXY, we know complex structures have the tendency to just become more and more and more complex. So nothing can be said with very specificness. So in these scenarios, what I prefer to do is go in partial rather than all. So yes, nothing much to add here. I am considering longs, but I'm not considering full-sized positions because actually I was long on this today as well. What was it? Yes, and we had put the stop somewhere here. I was long, I think, somewhere here. We were assuming that this was an A, B, and C, and then it will not go lower than this, or even if it goes lower than this, it will be a little bit or small move. But that is now not how it happened, right? So I exited the positions and I'll look to re-enter later again. So long story short, wait and watch for long setups, not a full-sized kind of a market. And in these kind of markets, what I found is that you will get multiple trades. You will get in longs multiple times, maybe 2, 3 times. You will get stopped out only when the fourth time or the fifth time when the market really takes off. It will cover up all the losses you have made and give you decent profits. But that's the idea. You have to stay in there for that long. After all, this is a complex correction. If you can't do that with patience, it's better to just leave it. Well, nothing much to add here on gold. Now let's head over to S&P. S&P is another one of the analysis which we discussed last time, which did hit our target and gave us the profits. So when we discussed it last time, 20th, the market was somewhere here, right? The idea we discussed was that this is a triple zigzag in progression, and we expected it a downward movement will possibly continue. The targets minimum target was obviously the wave viola, which is at 4200, and other targets we had already discussed. This white box range was also already discussed, which is between 4200 to what is this 4115, right? So nothing new. We had already discussed it, and let me see if I can quickly show that in the last recording, 85th webinar S&P. The hell happened with S&P? It looks like some issue with the timestamps here. Is it? Oh, there it is. Hmm. That's weird. Well, I'll check. It looks like there has been some incorrect timestamps entered, maybe because it's showing only gold here. Anyways, so this is the chart of S&P as you can see on the top left from the last recording or the 85th webinar recording. And we are expecting either sideways and down or straight down. And I recall I actually entered a sell trade here, which I did carry forward to the next week in the Monday session and booked as the market went lower and lower in profits. So this is precisely what we discussed last time, and it played out precisely. So another what do you call +1 for our analysis. Now let's quickly check what's really happening on the live chart here. Currently, I'm out of this counter. The idea, as I said, remains that this is in wave Z, and already we have discussed the targets. So if we remove everything, it is almost very near to the Z. Now this will going to give us some scalp trades for this very minor movement. So, but that is not something I can just say that anyone can take. If you have the understanding of how to analyze it in this fast lower time frames, then you can probably look for it. But from my end, I think I will look for taking these short trades. Actually, as a matter of fact, I should have built up a minor short position already. But let's see. What the hell? Yes, so conclusively speaking, this is not a very potentially good zone to enter trades. The reason for that is that we are already near the target. The target is at 4118, roughly speaking, 411418 something. And the market is already at 4141. And the major part of the move, which is this part, has already happened. which is the market falling off from 4300 to 4200 to 4120. So not 200 points, but very near to it. So that's why playing this small lag will be risky. Now, with that being said, the count suggests that if this is a WXYXZ, and if this really is going to be the end of the triple zigzag move, then once this is complete, I will look for some reversal signs or signs of strength, and possibly then look for the market to reverse to the upside. For that, I have already placed the alert at the level of 4204, because this is where the significant break happened with heavy volumes. As you can see, is represented by this spike. I can actually zoom into it and just show you. So as you can see, the market did break this level with significant strength, right? So once it goes back and touches it or takes it out to the upside, then I'll be interested in considering possibilities of more upside movement. So that's about it for our analysis of S&P. Very short-term scalps are possible, right? But overall, this may be the stopping point, because we are already at a so-called target, which we discussed last time anyways. Well, nothing much to add here on S&P. Yes, guys, before we move forward, I'll request you to share this webinar once it's complete with your friends or colleagues and whoever else is interested in content like this or is into trading. If you have some Slack group, Discord group, Telegram, etc., kindly make sure you have shared the content, because we definitely need more participants incoming. Right. So that's about it for S&P, and hi to you, Sushil, as well. That now let's head over to our next chart, which will be of Nifty 50. Another one which hit our targets precisely, in actually sort of a wild manner. So with Nifty, let's see what market was doing when we last discussed it. So first of all, let's see 20th October. There it is. So this is somewhere the market closed on 20th October. I had very specifically said that the idea is that this market will go lower. Target minimum was 19446. Next target is marked at 19138, right? And it has passed and exceeded both targets, right? So basically, we were able to predict this big fall, huge fall in our last webinar. And let me see very quickly if I can bring up the recording and show you. There it is, Nifty. And as you can see, this is the target minimum which I'm pointing in the last webinar. So this is another plus one or another analysis which we discussed publicly and played out. Let's head back to our current chart. What I'm seeing here right now is there is possibility for one another leg down, which can, roughly speaking, take us to the target level of 18612. Right? We do not have the confirmation yet. What I'm thinking is that this market might be heading for a possible structure as a zigzag structure. So in case it is a zigzag, we expect the market to reverse around 19122, which is also a known level which can offer resistance, right? So around this level, we will be looking out for some selling opportunities if we see some weakness in the market, right? And if we do catch, then obviously the target minimum will be the low 18838, and if it goes and continues lower than 18612 or 616, roughly speaking. So yes, we don't have the confirmation yet, and yes, the major part of the move is over. So that's why I'm not saying that right away we will enter shorts or anything. but we'll wait for possible opportunities around 19122. That's about that for our discussion on Nifty. Wait and watch for more selling possibly. Yeah, lastly, one more thing here. If it does sustain above 19122 and does something like this, that is test this level to the downside, then most likely this is not going to go lower and it may have something else playing out. We'll see it when we get there. For now, that's about that for our Nifty analysis. Our last chart is of Bitcoin, and it did not really play out at all as we expected it to. It's actually doing the complete opposite. So let's look at that as well. And before we look at that, again, guys, I'd like to request you to consider sharing this webinar once the recording is complete or the webinar is over, basically, so that we can get more views. If you have memberships or are you a part of some traders groups on Telegram, WhatsApp, or whatever social media you are using, Twitter, Facebook, etc., make sure you share the content so that we get more views and more motivation to come up with this stuff. So now what we were discussing in the last webinar was the market was somewhere around here, where is it? Here, somewhere over here the market was, and the idea was we were looking at this whole move as a possible correction in the upward direction, but it literally did not do that. It literally did the complete opposite. So what is it really doing? So from a count perspective, I have now considered that the correction completed here, 24934, and after that this market is heading up for the at least the C, if not the 3. So it is having some upside remaining, which is the point of interest here. So worth noting here is that we are expecting that this market is currently progressing inside of wave 4, right? Which is what I have pointed out 2-3 days ago, I believe. Now this wave 4 can go as low as 33115, let's say 33101, 33,100, let's just say, right? It will not break any guidelines. Well, the guidelines can't be broken, they are just guidelines, but it will be in accordance with the guidelines, I should say. At this level or above it, we expect a reversal. And how do I plan on catching it is just that if it goes above 34,800, then I'll be looking to add minor shorts and so on and so forth as it continues higher, right? And let me just add a minor sell on S&P. Very quick trade as we discussed very recently in alignment with our count. So yes, I've added a minor short position on S&P for the analysis we discussed because our alert has gone off. Yes, anyways, what I was saying was we expect that Bitcoin has at least one more leg up remaining, but we want to see a reversal either from 33,100 or before or above it, basically. So as I said, I will enter partial longs above 34,800 and keep adding more for the targets minimum around 35,900. So I'll just write that down. So at least one leg up is expected on this counter, and actually I believe it should cross 35,900 for a little bit higher levels, but we will see that when we get there. So this is the update from my end on all these what do you call instruments. And as I said, guys, I update these analysis as well as my live trades in our Slack group regularly every day. And if you want to check them out, you can just head over to our website 50is.com/contact us and request details for Slack private group by filling out this form. That was about that. And lastly, do not forget to hit the like, subscribe, etc., and make sure you share the content if you are finding it useful. That will be really, really appreciated. Thank you again for being a part of this webinar, and I'll see you guys in the next one. Take care.